Hey, Tom Hegna here. I'm at the NAIFA Apex meeting in Phoenix, Arizona. I'm here with one of the big sponsors, Harlan Accola from FAIRWAY Mortgage. And Harlan, I mean, it's a pretty big deal to be a sponsor of an event like this. Why do you do it?
Well, you know, a lot of people ask us that. We're in the mortgage business. What are you doing here? You don't sell insurance, you don't sell annuities. In fact, we don't have a wealth management division at all. And our wealth management division is NAFA.
Yeah.
We need to come here to meet up with people that are going to be able to help our clients. Because we found out a number of years ago that approximately 70% of our clients do not have a financial advisor.
Wow.
Which we think is horrible. And we don't want to start a wealth management division because we just do mortgages. And so we come to NAIFA to support NAIFA and network to be able to find people that are going to be able to help our clients, help us to give them a better financial future.
I think that's great, and I've been a NAIFA member for over 30 years, and I know you're a big supporter of NAIFA, and I think it's so important for advisors to be part of something like NAIFA. I mean, they need the help as well, and I've found that, you know, you meet great people, you make more money, and you have the opportunity to do something bigger than yourself.
You know, that's true. It kind of comes down to the basic teamwork. There's a lot that one person can do, but there's a whole lot more that we can do as a group. And we find that especially, I specialize in reverse mortgages. Of course, I did forward mortgages for a lot of years too, the normal traditional mortgages. But what I've found is that whether it's long-term care insurance, whether it's life insurance, I learned about reverse mortgages and life insurance at the same time, and realized that, oh, okay, so this, if I don't put as much money into paying off my house, I can afford to buy life insurance. I've got 7 policies.
Yeah.
If I would have paid off my house, I wouldn't have been able to do that. And that's where I understood that the reverse mortgages and not paying that 15-year mortgage and some of the Dave Ramsey stuff that I heard at the beginning. Unfortunately, I heard Dave Ramsey before I heard you, and that was not a good thing. So that's one of the things that I've been able to learn in networking with insurance folks, annuity folks, and of course the assets under management, that it just makes more sense to put money into the insurance products than it does to pay off my house.
Yeah.
And if I die, my wife would have been okay. If I didn't die, I've got more cash value.
Exactly.
And then I've got permanent life insurance to take care of my kids, because they don't want my house. They like my life insurance death benefit.
That's great, and you know, you've helped sponsor me at events, and you've sponsored a number of different events. So like if somebody needed help, let's say they wanted a speaker, they really couldn't afford it, kind of what are the parameters where you would say, yeah, I'd sponsor that versus not?
Yeah, that's a great point. We'd love to sponsor you because you have the same thought process as what we do. Your number 7 is using home equity wisely. Right. So it goes to the same thought process of what we're doing. So we want to get your message out because it helps our clients, it helps the clients of the advisor, and of course helps us in the long run. So what we want to do is when we're doing a session kind of like that one we did together, I think it was in West Bend, Wisconsin, where I had a piece where I talked and educated some of the consumers, and then you, of course, were the headliner that explained the overall big picture, the 30,000-foot view.
Do you like to have at least 100 people, 200 people? Is there a number where it makes sense? Because you can't do it for every little event, but if there's a bigger event, are those the ones you're more likely to
We
help
prefer
with?
the bigger events
Yeah.
because it simply makes more sense from a monetary standpoint. But we're 50 is kind of our minimum because there's some NAIFA chapters that are pretty small.
Right, and it doesn't pay to fly somebody and do it. You know, I can do some of that virtually. I can do the smaller ones virtually.
Yes.
You know.
And so if we can get together in a bigger area where we can draw from like maybe a Seattle or a Denver or whatever, you're going to pack a lot of people in from even the outlying areas and so on.
Now let me just ask a couple questions about reverse mortgages, because as you said in Don't Worry, Retire Happy, step 7 is use your home equity wisely. And for years people talked about using a reverse mortgage as a last resort, but Dr. Wade found, Dr. Fink have found, no, sometimes it's better to use it as a first resort or as a buffer asset. So it's kind of like a Swiss Army knife. There's lots of things you can do with it.
You know, it's funny. That's one of the first slides in my new presentation is the Swiss Army knife.
There you go.
Because everybody gets the idea, well, reverse mortgage is for people that are broke. 80-year-old widow. Well, when I went to training, excuse me, 18 years ago, I said, what's my typical client? And they said, 70, 80-year-old widow who just lost her husband. And I realized very quickly from a financial planning mindset that no, it's a whole bunch of people. Well, I just turned 62 in April and I got my own. Not because I needed it, I could continue to make my mortgage payments, but I purposely did that to make my mortgage payments optional.
Yeah.
So there's 3 different people that hit the 62-year-old age bracket. The first group have their house paid off completely. And then it just makes sense to do a line of credit. Fowle, Hopkins, the people at the American College did solid research that proves without question that it makes sense to set up that line of credit. You should borrow money when you don't need it. Use it as a buffer asset, as you mentioned, so that I've got some other place to draw money from. That's a really big deal right now with the stock market down.
Right.
People that have money in the stock market don't draw it out, leave that
Right.
sit and pull the money from the house. The second group of people are people like me that purposely or maybe accidentally left their mortgage payment go and they are still making a mortgage payment. What most people don't know is 40% of people that hit 62 are still making a mortgage payment.
Wow.
And when my dad retired in 1981, less than 5%.
Yeah.
Now 44%.
Yeah.
So they should just eliminate their mortgage payment because they don't need to make it anymore. They're old enough. The third group of people are in the wrong house. They need to move out and buy another house. But when we moved from central Wisconsin to Minneapolis, Minnesota area, the house prices were double. And so we used a reverse mortgage so we didn't have to put as much money into the house and we can still be close to our kids.
Yeah.
There's all kinds of people like that in those 3 groups that should look at it not because they have to, but because it simply makes financial sense. It's
Yeah,
kind of like life insurance.
I'm definitely going to get a reverse mortgage line of credit because that line of credit goes up each year, and over time it could actually be like a put option on your house that if housing prices crashed, you could literally turn in the keys to the bank and take the higher amount. So to me, you know, it's almost like a protection thing too.
It is. I've told financial advisors for years, why don't you buy a put on your home equity? Especially now when values are incredibly high. Just get that guarantee in place. And the fact is that now with inflation and rising interest rates, the doubling happens every 10 years. So if you take it out at 62, a $200,000 line of credit, it's $400,000 in 10 years by the time you're 72. So it's kind of crazy not to do it because it's just available cash for fun stuff as well as more difficult things.
Well, Harlan, thank you so much for being a leader in the industry and sponsoring so many different things. We really appreciate it, and I appreciate all the work you do in the reverse mortgage market.
Well, thank you, Tom. You know how many people your work has impacted, and we're very thankful. And we're thankful that you included us as number 7 in your book because that's part of the equation now.
That's right. Well, thank you very much.
Thank you. Appreciate it.